Joel Farrell here, and the content tour continues. We're in Dallas, Texas at the Apothecary. I am sitting here, we're talking about real estate and what's working, what's not with Brannon Potts. We've known each other for a while through the one rental at a time community.
Yes.
Marco Shiro, the glue that holds the community together with all of his lives every single day. But what are we going to be talking about today? What do you do?
I figured we'd talk on the build to rent model, which has become popular especially in the last few years, and kind of that story of how it got going from the beginning with me.
The one headline that I put out on socials was, rents are going down, but you're making more money.
Yes.
Which is unique in this market, but the whole build to rent thing, we hear a lot about it, from people like D.R. Horton and all these big companies, but you're not a big company.
Yeah, I'm doing it one rental at a time.
Right. So what I want to do is I want to just take one scenario recently and then work our way backwards.
Okay.
On the journey. So why is it working right now?
To me, it's about getting them. You make the profit at the purchase. It's getting those numbers right from the beginning, and what I've been able to do is dial in what do I pay for the land, but then I'm also looking at the rental market. What will a single family home rent for in this area? The simple thing is kind of a very basic one, the back of the napkin, is I'm looking at a 1% rule. So if I'm looking at, giving specifics of today, if I know I can get $2,100 in rent, then I'm saying, okay, can I build that with the land, with all costs included? Can I build that roughly for $210,000 if I can get $2,100 in rent? And so I'm reverse engineering it that way, and I've been able to do that. And over the last few years, because I've only been doing this 5 years, actually 5 years in July.
Okay.
So it's still very new, but each build, as I've begun to get more expertise at it, I've sharpened the pencil that much better, and my numbers have improved each time, and my returns have gotten even better. So just example, so the ones I'm almost finished, these are things so fresh. These are 30 days completions. Started these just, it was November of last year, and because there's not much new builds going on right now, some of it's, the builders have kind of pulled back in the last year, the contractors have gotten very hungry, but even some of the materials. So I've been able to build these are my actual best numbers yet. I would say the numbers are down on my cost to build about 5% or so. So my numbers have gotten even better, because when I do the 30-year financing, that number's a little bit lower because it costs me less to build. So my margins have gotten even better of what I've put into the deal, into the project, what I'm going to get in cash on cash return. The reason I did it, it starts back from my family. My parents, when I grew up, my mother was a really good interior decorator and designer, and maybe you call a part-time architect. So I grew up, my parents built every one of our houses when I grew up, and I enjoyed watching that process. And so for me, my first build was when I was 24. I built my first house. I designed it and went through the process with a builder. It wasn't me being the general contractor. I didn't have that experience. But I was able to do that, and every house after that I built, I realized, hey, I've got instant equity in the build. Well, as I got going into real estate and said, okay, I'm going to do my own investments, why not build? I love the process. And so I've been able to build these with instant equity. Me being a little older, so when I started this, I was 49, so that dates me here. I'm 54 now. I needed to move fast if I was going to retire from rental properties. How can I do that? And so I looked at 3 reasons the build to rent model would work. First was I was able to grow my wealth faster because I had instant equity on the build. I needed that wealth here in the next 10 years. How can I do that quickly? And it was through building instant equity. Then I was also the least amount of hassles. I own a property management company, and I was learning from other people that these older properties always had repairs constantly every month. What was the next thing to break? And so you didn't know what your final number was each month, because what was the next repair coming through? How can I minimize that? And that was that third reason I could grow consistent income, because I didn't have the repairs, because these are brand new properties, and it allowed me to build up reserves for long-term capital expenditures. So I said, this is the path, and I love building. I design them, design the floor plans, even do some interior design that I learned from my mother and watching HGTV, and we're close to Magnolia down in Waco with Chip and Joanne, so I love those kind of things.
Okay, we just jam-packed a lot of years in there.
I know.
So you mentioned the build to rent starting just a few years ago, 5 years ago. So what were you doing before that, and how long, and I want to get back to your first deal.
Okay. So I've been in finance and real estate for 30 years. Started out as a stockbroker, thought that was the path I was going to go, but I realized I didn't like it as much as I thought I would. Got into commercial finance. So I was a vice president of commercial finance for a bank here locally. Like that, it was an MBA on steroids. I was learning how to underwrite real estate, underwrite businesses, and realized I've got to go apply this. I knew I was going to be there for a period of time. The good thing was I met my wife there. So that was the biggest win, and met her there. Got into real estate about 15 years ago, owned a real estate sales company. So I was helping people buy and sell properties, got more experience doing that, then started property management with the ultimate goal of owning rental properties. So this is a 30-year journey, primarily in finance and real estate. And now I guess I would say fully applying all those years of experience into my own investments now.
The commercial banking job, you said vice president?
Yes.
So for those that don't know anything about that industry, the bank is always looking to protect itself, grow the business, but also protect itself. Can you give us maybe some illustrations or examples of how the banking industry is looking at loaning money on real estate?
I would say, especially on the local side, you know, a loan officer that does a really bad loan can lose their job. And so they're naturally going to be more conservative in how they underwrite it, because in some ways their job is on the line. And so I learned how to evaluate it from every angle. You're thinking always worst case scenarios. Is there multiple paths out if some scenario doesn't go like you thought it would? And so that's what I do even on my channel, is I teach that, and I want to have the properties not just today, but for 30 years from now. And what are the things that could go sideways? And I learned that from commercial banking, of how to do it where it's a healthy leverage that doesn't put the property at risk, but also has positive cash flow. How do you look at all those angles? So say rents went down. Maybe something happens in the economy like we're seeing now. Maybe something's happening. What if the rents weren't the way I thought was the ideal way? What are my backstops to protect my financial condition? And so I look at that conservative loan to value, and then I'm also looking at I do what's called break-even analysis. And I learned all these things from commercial banking. And so I want break-even analysis to be at least 75% of rents. And that's what I have in my spreadsheet. As I'm looking at it, I'm looking at worst case scenario. If rents went down by 25%, what happens? Can I cover all the costs? And so I look at that and I do a break-even analysis. The other thing is, I learned even in banking, I don't look at max market rents, because that's like the ideal scenario. I never underwrite for max market rents. I'm looking at what average rents are and below, and saying, where does it get where it is negative cash flow? Could I handle it? Well, if I'm starting at 75% loan rents, but I also started at a healthy leverage where if worst case, I can sell and get out. But I learned that from banking, being very conservative, and so far it's served me well.